All right, y'all, welcome back to another Beginner's Blueprint video. Today is day 33. We just got done with all of our strategies, right? We had the PDI strategy, we had the continuation, and then we had our gap model. Today is basically just going to brief overview of the basic shit we need to know in order to be successful with any of those three strategies. So we're just going to be going over understanding structure in the market, and then also what we have on the screen right here, which is understanding timeframes using liquidity, inversion for value gaps, and for value gaps. Because when you simplify it all down, that's really all we're using, right? We're using liquidity for value gaps and inversions. And inversions is literally just a fair value gap, right? So starting off over here on our left, right, with our bias. Okay, let me pause this real quick. Starting off over here on our bias, right? How do we find our bias? Well, what time frames do we use? We use the daily, we use the 4 hour, and we use the 1 hour, right? So what are we looking for? What PD arrays are getting respected or disrespected, right? And then what does the bias do? Well, it determines where price most likely wants to go next. So pre-market, if we come down, right, we create an hourly for value gap, and then we tap into a 4 hour bullish and sweep out previous day lows with key levels above us. Let's say this is a London high and Asian high. And as market opens, we inverse that 1 hour. Okay. What can we assume from there? Well, we can assume we're most likely bullish on the day due to the fact that we are disrespecting high time frame bearish PD arrays and we are respecting high time frame bullish PD arrays, right? So what would we want to look for from here? Well, we would want to look for a continuation model because obviously there is going to be no PDI. PDI would have happened right here. So after we get the 1 hour inversion, we're now going to jump into the 5 or 15 minute time frame and look for conditions. And again, I have an entire conditions video, but we can go over it briefly real quick, right? It's used as a confirmation towards our entry / next draw on liquidity, right? So if we inverse this 1 hour gap, but we still have London highs and Asian highs above us, well, what are we looking for? We're looking for a 5 or 15 minute fair value gap to get open up. So then we can then take a continuation model towards these key levels 1 and 2, right? So say we inverse it, market opens, as price is trending up, we come down and retrace into a 15 minute gap. Well, then what am I looking for from there? I'm looking for an entry. And how do we know what is a valid entry? Well, we're looking for the highest time frame inversion on the 1 through 5 minute. And what are we doing? Well, we're going to target key levels / internal draws on liquidity after we enter. So again, a bias is going to be our daily, our 4 hour, and our 1 hour. Our condition time frames is going to be our 5 minute and 15 minute. And our entry time frames is going to be the 1 minute through the 5 minute, right? Whatever is the highest time frame inversion through, essentially, this would be the retracement leg right here. Okay, so what do we end up getting? We get a 2 minute inversion for value gap after tapping into a 15 minute bullish after disrespecting an hourly bearish and respecting high time frame bullish PD arrays, right? So then we get further confirmation that, okay, price does want to go higher. What can we do after we get our 2 minute inversion? Well, we can long that shit 5 days out the week, stops at the lows inside the fair value gap. Where's our break even point or TP1? It's going to be these internal highs right here. Where's TP2? Can be our key level 1, which is London highs. And then what is TP3? It can be our Asian highs all the way over here, right? So that is the basic understanding with time frames using liquidity, inversion for value gaps, and normal for value gaps, right? Pretty simple. Are we disrespecting or respecting high time frame PD arrays? From there, we can make an analysis, Kowalski analysis on our 5 or 15 minute, right? Is there a condition that is going to open up? And if so, let's look for a tap into that and then a rejection out of it. And how do we know it's a valid rejection out of it and when we can enter? Well, we get the highest time frame inversion coming out of that fair value gap, right? So say there was, again, 2 1 minutes and 1 2 minute. Well, we don't care about both of the 1 minutes. We just care about the 2 minute getting ran through, right? And then what can we do? We can target our key levels and our internal draws on liquidity. This is going to be internal draw 1 and then key level 1, key level 2. Okay. And one last thing I'd like to talk about before jumping over to understanding structure is we cannot just go from the daily time frame down to the fucking 1 minute, right? We have to build conviction. And how do we build conviction? Well, we use all of these time frames, right? If there's nothing on the hourly, okay, what's on the 4 hour and what's on the daily? And again, we're not going from our bias time frame all the way down to our entry. We have to find conditions inside the market that are going to get either respected or disrespected to help confirm our draw on liquidity, okay? So don't just think, okay, you see this and you're going to enter off the next, say we get a slight retrace like this, and we enter off the next 1 minute inversion out of it. No, that's not how it works. Especially if we have a PD array below us that's unfilled, especially a condition timed PD array, which is a 5 or 15 minute, we're most likely going to want to draw lower into that and then see an inversion out of it. Okay. So just keep that in mind. Again, don't go straight from our bias timeframes, which was the daily, 4 hour, 1 hour, all the way down to our entry timeframes. Okay, we have to incorporate the middle timeframes as well. Okay, so moving on over to understanding market structure, there is 8 things I want to go over. In after I read each one, we will go over the examples. Okay, so don't get overwhelmed by what you're seeing here. So, if the first point is if London or Asia have a giant move, well, we can expect New York AM to be choppy, right? So say we come all the way up during Asia and then London just floods the market about 300 points. Well, what is New York AM most likely going to do? We're probably just going to accumulate due to the fact that the volatility just ran out and we got to generate more liquidity in the market in order for us to make or fill those giant moves, right? So then we can expect a possible AMD model if that opportunity presents itself. Most of the time, if London or Asia makes like a 200 plus point move, New York AM will literally just chop and it'll be pretty shitty fucking price action. And then vice versa, if London or Asia just chop, right? If London and Asia is just chopping, well, we can expect New York AM to carry out either that reversal move or the continuation move, whatever structure we're in, right? From there, if New York AM is chopped, then New York PM should pick up. Same thing as London and Asia with the AM. Well, if AM is chopped, New York PM should take out the daily objective, okay? If we have a data news candle, so say, right, we just have normal like movements in the market, but then all of a sudden this data news candle does fucking this, right? Just creates a giant wick in the market. Well, if we take out the lows first, we're most likely going to want to draw to the highs and vice versa, right? If we take out the highs first, we're most likely going to want to draw to the lows after. That's just how data news candles work. If we take out one side, we're most likely going to reverse and go to the other side. So that is a good point to know, because when I didn't know that and didn't understand that, it made it a lot harder, especially when we had pre-market news. If we have equal lows or highs, we can expect the area to be drawn to. Now, I've been saying this throughout the entire beginner's blueprint. Do not long if we have equal highs or equal lows at our stop loss, and do not short if we have equal highs at our stop loss, due to the fact that, let's say we create equal highs. Well, what is now here? There's 2 areas of resting orders here. So what is price most likely going to want to do? It's going to want to come up, sweep out those orders, and then carry out the move lower. It's just how price moves, and I've learned that with screen time over trial and error. We can use time to our advantage, right? And we've talked about this prior, is open low, high close, open high, low close. So let's say 10 a.m. opens up right here. Okay, what are we doing before 10 a.m.? We're chopping, right? We're kind of in this chop zone. And what's below us? Well, we have an unfilled, let's call it a 15-minute fair value gap, right? So if we're already bullish on the day, what can we look for at 10 a.m.? Well, we can look for an open low and then look for a manipulation out of that chop into this condition, and then look for a rejection of the condition. And then from there, we can target any buy side that is above us. Okay, so that's how we can use time to our advantage. And let's go over these last 2 real quick before this video ends. Okay, and then we can expect a resweep of internal highs or lows if our entry, which is inversion for value gaps, takes too many candles inverse, right? So I've talked about this before, right? Say we hit a key level and we get a 3-minute fair value gap right here, but it just takes mad long to inverse this gap, right? So we inverse it with this candle. Well, we're most likely going to want to wait for a resweep before entering, because what did we just generate? We just generated all this LRL right here, right? Relatively equal highs. So what do we want to wait for? We want to wait for a resweep of this high that takes out everything, and then we can possibly see an SMT with that resweep, build further conviction that price wants to go lower, and then enter off of the inversion of this resweep leg, right? And then where would our break-even points be? Break-even point would be at this internal low right here, and then we can target any sell side that is below us. Okay, and then if the 3-minute, say we tap into the high time frame PD array and the 3-minute just gets inversed with ease, okay, then we don't gotta wait for a resweep. But if price hits a key level and starts to chop around, then we're going to want to wait for a resweep every single time. And then the last point I'd like to make is we should only be charting on NQ, because I know most of you guys are probably going in on MNQ, which is micro NASDAQ. The charts aren't the same. They're pretty equal, but they're not the same. So sometimes, like if we have equal lows on NQ, MNQ will look something like this, right? We won't have equal lows, or it might even look something like this. We might have swept out that area of liquidity, but NQ is the actual asset that we're trading, so we want to primarily focus on the NQ chart only. Okay, so with that being said, that'll be all for today's video. I will catch y'all boys back tomorrow. LoeGpa on any social media. Subscribe if you want. Appreciate it.